Yes, so I am recording the session. We've had uh, one half of the session recorded. Will gold turn bullish again? Which levels will turn again bullish? So all we can do is assume whatever happened last will continue to happen until proven otherwise. So what do I mean by that? If we look at the get rid of the monthly boxes for now. Let's just look at the day. How has the day played out? We've taken the highs, peak formation high. We've now taken the lows, peak formation low. However, we are below still the lows of yesterday. So when I say whatever just happened, we expect will continue to happen. So we assume, given that we've broken out of the lows of yesterday, that's the last significant level and development in the market. And I've not been proven otherwise yet. We've tried to undo the breakout and we failed. We have failed at yesterday's lows and last week's highs. So we're back below not only yesterday's low, but last week's highs. So we assume that the market will continue its sell-off. Pretty basic stuff. And what we want to rely on in this case would be momentum. We need momentum from a higher time frame confluence to give us that security in our thinking that the market will be bearish for the foreseeable future until it turns bullish. Now, given that we are already, let's have a look. We are bullish on the monthly chart, so that doesn't help our thesis at the moment. Well, we don't have a thesis. Well, we do from a daily perspective. So here is our monthly thesis. Our thesis is we are bullish above the previous month's high. Our weekly thesis is that we are bearish below last week's high. Resistance, bearish. Our daily thesis is that we are bearish below yesterday's low. Bearish. So what do we have? We have a monthly condition that is bullish, B for bullish. I'll make it green. But we have a weekly and daily bearish. Now, given that we are day trading this scenario, not that I would be trading this today, now at this time of day, coming into the end of the week, Friday, but had this been a condition that we were looking at, let's say, at the start of New York, I would be looking for my setup to go short because we've got the daily and weekly chart aligned. I would go down to a lower time frame and I would use the 4-hour chart, the 8-hour charts, highs and lows as my thesis for trading on a 5 or 1 minute chart. And I'd be looking to go short depending whether I get my rules met for my strategy. And I'd be looking to go short and targeting prior days levels, prior weeks levels, the volume profile, value areas, and so forth. There's an array of things that we can target, namely highs and lows of periods and highs and lows of the volume profile of any given period, be it the day or the week. Okay. And I'm targeting a 3-to-1 target, generally speaking, minimum. If I can pull off 5, 6, 7, 8, 9, then great. We took well, not me specifically, but one of our students took a 9R trade last week. I think it was in the UK 100, perhaps, or it might have been Euro CAD. No, Euro Aussie, perhaps. I can't remember. But they're not uncommon, but they're not frequent. But they are around. So, I mean, had we taken this gold trade, for instance, I mean, what would have that returned if we were targeting, say, what, Tuesday's highs? That'd be on the region of 6R, depending on your stop loss. So, any other questions? And Chaz, if you sign out and then sign back in, you should see the screen, the video. Um, any questions, guys, relating to the strategy or how better I might be able to help you with your approach? But it's about the highs and lows of the day, of the week, of the month. It is about the volume profile of the day, of the week. It is about aligning yourself with the higher time frames and working your way down and getting a bias and then designing your entry rules. So as a clue, you want to be looking at 8-hour and 4-hour highs and lows and breakouts and fake outs thereof, and trading with momentum, however you determine that on the session itself. It's also about how is the day setting up? Where is your session in relation to Tokyo? So if you're trading the US session, for instance, gold here had been pumping up all day long. Tokyo, London, New York. That's 3 sessions of rise. That's 3 sessions of rise following minimum 3 breakouts. So you've got a 33 trade on your hands, right? 3 breakouts, 3 sessions of rise, and that is a lot of volume to target on the downside as it breaks out. So hence the parabolic sell-off. Someone asked, why is gold selling off so heavily? Well, when the market decides it's had enough of going up, it's got a lot of money to coming down and get. And that market's going to pull away from those that are trying to go long as fast as possible to trap them, margin out their accounts. It's a zero-sum game. For every winner, there will be a loser. And those trying to buy the breakout of yesterday's highs would be higher time frame traders being triggered in on a 1-hour chart, a 4-hour chart. And we say, no, we're taking your stops. Where will their stops be? Below the low of that day. And that, lo and behold, bang, straight through the stops, back up into a prior support area that is now expected to act as resistance for a continuation trade to the downside, as per the weekly and daily chart being aligned. The daily chart is below yesterday's low. The weekly chart is back inside, or it will be at least. No, it is here. It's back inside of last week's highs. So that there is the weekly and daily chart aligned, and we assume that that condition will remain for us to be able to go short. And if it doesn't, then we're stopped out and we flip the other way and we assume that we're now going bullish and we make back what we lost and lots more. Question, will be easy when we trade with this indicators. If gold trading below in the day in this month will be bearish or bullish. So as I said, we are using levels, breakouts and fake outs. So we've got a fake out. What have we got here? We've got a fake out of last week's highs. Fake out on the weekly chart. Fake out. So while below that fake out level, we are bearish. And that level is 2431. We are also below the daily chart's lows, yesterday's lows. That level is 2430. Well, we're right on the money at the moment, pretty much. But below that, we're bearish. Above it, we are bullish. Above that area, we are bullish. Below it, we are bearish. And that is the weekly and daily levels aligned to be either bearish or bullish. Does that make sense? Now you've asked specifically about 2388. Right, 2388 is now then the weekly chart align. Sorry, the monthly chart align. So if we get below that level, then we're uber dovish. Bearish. Still thinking in terms of the Fed. Okay, so if we get below there, we have not only the weekly and daily charts aligned, because we'll be breaking down on the daily chart, we'll be faked out on the weekly chart, and then we'll also be below June's highs, and we'll be faked out because we've rallied out of those highs last month, and we've stayed out so far this month. But when we come back inside of those highs, or if we do, that will be a monthly fake out. So we'll have all three timelines, the monthly, weekly, and daily aligned. And that's the recipe for a decisive continuation reversal trade from the highs of last month down here. So if you're, for instance, if you are a swing trader and you take the trade to go short currently, and then if you get below that level, then you might be thinking to yourself, right, well, I'm going to add to this position. I'm going to hold on to it. I mean, I always like to take some money off. So I like to pay myself for all my analysis, because what it could do is come down to here and bounce and then stop you out. And you'll kick yourself for not having moved your stop loss to break even, for instance, or at least paid yourself something, so that if you do get stopped out, then it might be you might end up, well, you should do it so that you end up in profit, even though you're stopped out. Or you decide, right, I'll move to break even, I'll set and forget, and I anticipate that the market will continue in line with the weekly and daily, and then the monthly to go even lower, and you can target the lows of last month. Okay. Is anyone getting any value out of this? Everyone's very quiet. There are no questions. I'm not even sure if anyone apart from myself and Sunil are here. I can see people online, but no one's interacting. So seems like we can probably wrap this up. Right, so let's wrap it up. I believe that there's quite a decent amount of information there to go away with and play with. If there are any other questions, let me know. Then the mentorship. If you want the link, I can send you the sign up link, and you will receive an invite to have a one-on-one with me, and we'll establish where you are with your trading journey so far, and if we need to direct you in the way for which I trade, if you haven't already picked up on how to monitor and analyze the flow of the market and align yourself with the weekly and daily cycle, So the daily cycle, what I'm referring to are, as we saw with gold, the breakouts, three breakouts in a row, what to look for on a day, how the sessions have set up. I just gave you one example here of three sessions rising and a slam dunk short trade into all of that volume that's been rising on the day. There are variations of what we look for, trapping patterns and so forth. But the strategy in itself is one that you don't really need to pay too much attention to how things are set up. You could trade it blindly. Um, you only need to look at the levels, follow the rules, and you'll probably be doing almost as well as if you were also adding in other relatively, I don't want to say, well, comprehensive analysis, um, which, by the way, is always subjective to some extent. So, what the strategy aims to do is remove as much discretion and subjectivity from your analysis to make life an awful lot easier. And trust me, after many, many years and going down the rabbit hole of strategy hopping and so forth, this is by far the most simplistic approach that I have used to trade the market. Um, on top of that, um, we have a indicator that's in development, which would also be available to students to help you analyze the market. And in phase, I mean, it's already there in that respect. And then in phase two, what we intend for it is to actually, um, there are how many setups? There are, I'd say 12, I think, 12 setups all in all, for which the indicator will alert you to if one arises, and it will literally tell you when to enter. So you could just rely on that. But that's something, I'm not going to promise that, but that is something that we're working on. So, um, when there's a will, there's a way. It's a bit complicated getting there, the logic and the coding and so forth. But we're making advancements on that. Um, but we're almost there. There are a few bugs at the moment in what we have, but we're making progress. Um, So if that's any of that's of interest, let me know. You'll have your one-on-one with me to start things off. We'll add you to the group, the coaching group, and there will be live sessions. So the live sessions are at the moment in the US session, and we'll sit there together in a webinar. Not using Discord, we actually use Gmail chat. Can't remember what it's called, Gmeet. And there we are live with one another discussing the watch list, what to trade, what to avoid. I give you my entries, my exits. You can follow me, do the exactly same trade as me if you wish. We do those on a Wednesday and a Friday, and we've had some. I don't think we've lost any money so far. We've done 5 sessions, and we've been we're up basically. We're up um, on those, and that's just 2 sessions a week, Wednesdays and Fridays. That's not including all the other trades that are being traded around the clock, which are producing fantastic results. Um, and there will be 8 live sessions available to you. So they're also recorded. So if you can't make it for whatever particular reason, there'll be a recording. There's a video library of material, learning material, which you'll have access to, um, with videos such as this. Um, and this is quite an old video now, but we were 30R up in the matter of, was it 2.5 weeks with this strategy. Some struggle to make that within a year, let alone a couple of weeks. Um, if you want to go to Trustpilot, there's kindly our current mentorees have been commenting there, saying how valuable it is. 5-star trading results. One of our students posted that he got 9R on one of his trades. Oh, it was sterling, Australian dollar, 9R. So if you're trading 1%, that's 9% on one trade. If you were risking 1%, and that took him towards passing his funded trading challenge in a number of trades. and that was the clincher. So check out those reviews. Check out some of these videos. And if you wish to sign up, here's the PayPal link. Someone recently signed up and for whatever reason didn't let me know, and that was some 2 weeks ago, and was disappointed that um, that no progress has been made. So, I can't tell if you've signed up. That's the problem. I don't have access to the back office of PayPal, as it were. So, if you sign up, please let me know, and then we'll book your first one-on-one session with me. All right. So, I think that's all. We can leave it there. The price is $499. Mindos, $499, which is a very fair price for what you receive. Other, well, I'm not going to say similar. Well, I've seen other mentorships priced in the thousands, but um, I'm not going to compare myself or the mentorship to others. I'm confident in my experience. I've been in the markets for 20 odd years, and I'm from the bottom of my heart. The strategy that I am teaching is by far the simplest approach relatively for the outcomes. I think keeping it simple is the way to go anyway, but the outcomes of this strategy so far are phenomenal, and I don't see it any other way down the line. I mean, markets do change, but so long as you have momentum on your side, then that's the key. Whether you're day trading or swing trading, you want momentum, and that is what this strategy is based upon. Um, with a few other factors built into it, but predominantly it is momentum. So, as JR has said here, he said we're smashing it. So, yeah, we certainly are, and we'll keep doing so. So, if that's of interest, guys, then all you have to do is get in touch with me, sign up. There's the link. It's in the education channel. In fact, I'll post it in um, the webinar down here. And we look forward to bringing you into the program. All right. If you've got any further questions with regards to trading the flow of the market, higher time frame confluences, levels, and so forth, by all means, reach out to me. I'll be happy to help. And I shall see you on the other side of the weekend. I'm still around till the end of the day. I've got a coaching session with someone coming up shortly. I think it's at 2 p.m. my time, 4 p.m. New York, but I'll be here into the close. Okay, so any further questions, let me know, and I'll also be available on the weekends. I tend to private messages on the weekends also. Okay, so have a fantastic one, guys. Thank you very much for joining, and the video recordings will be posted shortly.